Hey guys, so let's talk about inflation. Let's see. So the president's put in some executive orders into place here that I think could potentially bring down the costs for a lot of people. So coming in here, we have a lot of these are going to pretty much all these are going to pertain to oil. So expanding the offshore drilling, deregulation, and rollbacks of the prior administration had a lot of really restrictive stance with drilling in America. He's approved the pipeline. He's going to fill the National Emergency Oil Reserve. And the reason that it's a big deal because this is going to increase the global supply of oil. And let me show you a chart real quick. So we come over here. So this is something that we can kind of expect with the trend in oil prices. So back in 2017 to 2021, we saw the price of oil, crude oil, stay between about $45 to $65 for the majority of the previous term here. And then from 2021 to 2025, under the Biden administration, you saw oil spike up, and it stayed between 65. We saw this one spike here for quite a while, where it stayed up around $120 a barrel. But for the most part, it stayed between $65 and $95 a barrel. So given the two policy differences here, one being where we saw less expensive oil with more favorable regulatory environment for oil companies making oil and whatnot and producing oil domestically versus one that was very restrictive, very anti-oil. And we can expect a similar trend going into the next 4 years. And you can actually see this playing out in the chart's price action where you're kind of making these descending triangle pattern where you make these lower highs. And it looks like the price of oil is going to break down and it'll trend between $45 and $65 for the foreseeable future. Now, the president can't completely reverse inflation because that would mean that we have to go into a deflationary environment, meaning a recession or a depression with the economy. Whenever inflation goes up, typically what happens is whenever it slows back down, all that's happening, if we go from I believe we were at 9% inflation and now we're coming back down closer to that 2% mark, that just means that the annual rate of inflation is going up 2%. It doesn't mean that the price of goods and services are going to drop dramatically. Now, the oil thing is different because oil plays a huge role in our daily lives. Everything, most people just think of, well, it puts oil in our cars and it makes our cars go forward. But oil is used in everything from lipstick to clothing. Pretty much anything you use in your daily life, it connects back to oil. So given the widespread use of oil within the economy, if the price of it comes down, it means that the price of goods in America will come down as well because transportation costs of those goods go down. The production costs of those goods go down because if oil is used to make certain products, well, if oil is cheaper, then the product becomes cheaper because the manufacturers, it doesn't bother them. It only bothers the consumer. If the cost to make a product goes up, all they're going to do is increase the cost. So if you make the materials for that product come down, if you make the cost of those materials come down, then the product can be cheaper for the customer. Because the company's profit margin, it's effectively going to stay the same no matter what. The only difference is that poo-poo rolls downhill, unfortunately. So it all just comes down to the consumer. So I think that could be a huge win for, the average American, because I think that costs for your average goods are going to come down because we're going to be in an environment for the next 4 years where oil is cheaper in America, meaning that products can be produced cheaper. They can be transported by truck cheaper, meaning, cost of produce can go down because trucking fees go down because, again, the cost of the gas, the cost of the diesel, it's all going to go down because of these less restrictive regulatory environments around oil. They're not attacking it. They don't hate it. And it's frankly, it's kind of ridiculous because we don't have a better alternative. It's just a fact of life. You have to use oil in our daily lives for everything from, your Starbucks coffee. It comes in a plastic cup that was made from oil. So, because we don't have a better alternative, something to replace it, attacking the oil industry the way that the Biden administration did, it does effectively nothing but hurt the average American because now the cost that average person has to pay for all of the products that they use in their daily lives goes up. If you don't have a better solution, why attack the only solution that you have? I mean, there's no replacement for oil, period. Or at least right now, nothing that we can use widespread. So all this does is it just hurts the average person. I mean, that's really what it comes down to. So hopefully, we'll start to see the oil prices come down. We'll see gas get cheaper. We'll see products get cheaper. And I'm very optimistic about this going into the future. Now, something else that we can talk about here. So it looks like the president, he's done something behind the scenes to cause the SEC to create a new crypto task force that's essentially going to be responsible for developing clear regulatory environment for the crypto industry to help foster adoption and innovation within the industry. So this is a really big step, and I suspect that we're going to start seeing more legislation like this coming through the books. You know, this is really only day one. And it's not even over yet. We still have the rest of the day to go. So I'll keep you all updated as more announcements like this come through. We already saw and I believe I tweeted this out. Let me see if I can find it here. Talking about, so here it is. It's essentially Bank of America CEO says that financial industry is ready to adopt crypto payments if regulators give them the green light. And then shortly after that, we saw the news about the crypto task force coming out. So like I've been saying, now that we have a clear regulatory environment, we're going to see more big companies like Bank of America, Wells Fargo, we're seeing Sony, they're all coming out and they're starting to build on the blockchain. And what is the predominant ecosystem that they are choosing to build on? Well, it's Ethereum. So this is really good development, and really it's the regulatory environment that has prevented a lot of these big companies, because these big companies, they don't want to go into this industry unless they don't want to be attacked, and they don't want to deal with legal litigation fees and all these red tape that the prior administration had created. So I think that we're going to see a floodgate of adoption within the crypto space, and we're going to see more and more companies like Bank of America coming out saying that we're ready to build on it. Let's go, guys. So this could be the biggest bull run that we have ever seen in crypto. I mean, it could even dwarf the 2017 bull run. We'll just have to see how things unfold. But I'll keep y'all updated, and until next time, y'all take care.